All right, hey traders, TG Watkins here. It is June 29th, and I hope you guys are having a good time so far. It is Wednesday, so let's kind of get everything up and running. Now, there have been some developments news-wise that have come out, so we're going to be talking about that, and we're going to be talking about what is going on with this market, kind of what I'm seeing, and trying to figure out if there's going to be some bullishness coming up because we've seen some up moves, and that's fine. The first move is the first move. I like to wait for confirmation, which means we need to wait for price to kind of pull back and test some support and then confirm from there. And we're right in the middle of that, so we're going to dig into this a little bit more and see if we can kind of figure anything out as far as which way this is going to go. So let me get my screens just adjusted a little bit. What's up, Benji? Good to see you. Glad to see that Apple trade worked out. We can talk about that a little bit also. Oh, and then, yeah, just because I know there's always new people tuning in and whatnot, if you guys are new to me, come over here to profitpilot.com. That's where you can find more information. I do a newsletter twice a week, and I'd say there's some pretty good information in there for the last few weeks, so been doing well with that. And if you guys are interested in trading room, the Moxie room, or any other classes or things I do, you can come over here to services and check that out. You can also go to simplertrading.com as well. So the GDP estimates came out today, and they were estimating about a negative 1.5%. That seems to make sense to me. And the real one will come out in a few days, and we'll see if that actually lines up with their estimates. So either way, I think it's going to be negative. It's what we've been expecting, and this will make the second quarter of negative GDP, which is technically officially a recession. So a lot of talking heads out there are again talking about peak inflation, which, that might be a thing. They've been looking at, say, supply glut in Target and retailers and stuff like that. Like, just demand has fallen off, and now they've gotten their supply, and they're like, crap, we have a whole bunch of stuff. The other thing that we've been seeing is that commodities have been getting hit. And so that was like an inflation thing, right? Inflation and commodities going up. And so now that the commodities are starting to roll over, talking heads are looking at this and be like, oh, well, I guess inflation is probably going to come back down too. So I'm not going to wait in too much on that situation, whether we're at peak inflation or not. But I think what is happening is the prices going down is not necessarily from inflation going down. I think it's from demand going down. And demand going down means recession. Now, this might also have the knock-on effect of inflation going down. That could be a situation. I'm not an economist, so I'm not a pro in these kind of things. But the fact that demand is down and leading into a recession could also be the next stronger force compared to inflation as far as how that's going to direct the market and the economy and that kind of stuff. So we need to be careful about what's going on here and all that kind of stuff. And of course, bad can get worse. We know that. A couple of pictures I always like to keep showing here. This is the S&P. Both of them are the daily charts, and we have 2000 on the left and 2008 on the right. And I highlighted areas to where price just kept going down and down and down and down, and then it finally plunged. Okay, so I don't know exactly where we are, say, with today's market, but what I wanted to show is just like if here on 2000, you can just see how it just kept kind of going down. It had some spurts, which made it a little bit tricky to find the exact moment that things were going to really roll over. But you could see every time it went up, it got knocked down. And then it tried to get up, got knocked down. Tried to get up again, got knocked down. And then finally, you can see here where it just said, I'm done. And it just really rolled over and plunged. So those are some things that we need to keep in the back of our head. And then with 2008, you can see that we had a bounce up into the daily 50. It came down, got a little bit oversold. And what do we get? We actually got a pretty big move up right there, and then it rolled over. So we just need to keep this in mind because again, with the talking heads out there and buying opportunities, and even I'm trying to see if there's something bullish going into the 4th of July. We just need to keep that in mind. And then one other thing that we're looking at, I've been seeing people talking about Bollinger Bands and weekly support, monthly support, and that's fairly true. Like the Nasdaq has already touched its weekly or monthly 50. The S&P is basically there. The semis are there. The IWM is there. We're seeing a lot of higher time frames charts coming into larger support, and so we might be getting a bounce, but that doesn't necessarily have to mean anything. They are just lines on a chart. And so while we should be looking at that and saying, okay, is it going to find some support? Is this oversold? And are we going to get some rally? We do also need to temper that with, anything can happen, and we could have some temporary bullishness that then leads into more bearishness. So, you got to keep your head on a swivel. My dad always told me, as a pilot and growing up in an airplane, before we had ADSB, we had to always keep our head on a swivel because see and avoid was how you would fly, and you just make sure that as a VFR private pilot, you need to literally look around and make sure you don't see another airplane coming that you're going to hit. So same thing with the markets. We've got up, we got down. We need to be on both sides. All right. All right. So Teresa, good to see you. Hope you're thawing out up there in Canada. It is still a little bit cold here. In fact, I have the heat on right now, and we are just waiting for summer. I mean, we're now almost in July, and I hear 4th of July for us is going to be a little bit rainy. So, a little unfortunate on that one. All right. Let me get into Tesla real quick, and then I see you guys are asking some other questions too. Okay, well, in addition to Tesla, I'll talk about SPY and then Tesla because they're all kind of trading the same, and we're trying to figure out what kind of picture this is telling us. So the first things first, what we are trying to figure out, say, on the daily chart is clearly we were oversold, right? Big reactions going into the hot CPI data, and then a little bit more with the 75 basis point rate hike, which apparently a 75 basis point rate hike is still on the table for the next go around, okay? But we got oversold. You can see lower lows, but now we have the Moxie indicator actually trying to put a little bit of a bump here. Now, this doesn't mean bullish, bullish, bullish. It just means there might be a little bit of a bump for now. And the reason I'm cautioning you against that is because look how far below zero the Moxie indicator is, okay? That is a long, long way, and that's going to take a long time to get anything fixed. Of course, there can be bounces, but as far as a trend goes, this doesn't really mean anything, okay? So as far as a bounce goes, we could always get price to come up like this and cross over the daily 50, just like we got back here. Okay, it's possible. But if that happens, we need to keep in mind what is the direction of the daily 50 compared to where price is going, and that if price can get over the daily 50, the Moxie indicator is still below zero, so it's a temporary situation, and it's an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. So we know we are already setting ourselves up that if price happens to bounce for an extended period of time and either gets to the 50 or gets past the 50, we know we're moving up into resistance, and it's a matter of time until this thing rolls over again. So that's why if you're going to be bullish, you got to keep that bullishness in kind of a context. You got to be able to separate things. Now, the other situation is on the hourly chart. And I've been calling this out for a few days, and it was amazing the timing that we had with it yesterday, because I was like, this should be wearing out, because we talked about this on the 15-minute time frame. You could see that price finally started to come back down a little bit, and I was like, this is running into resistance over here. It's doing all the things I needed to do, and we should be seeing this soon. And I put out a few posts yesterday. I even put them on Twitter as far as the timestamp. And it opened up this morning, and this is where, look, I remember years ago when I was learning how to trade, stuff like this would throw me off so hard, because I look at this, be like, wow, that's a really strong day. Like, look at that open. Yeah, okay, let's go. And the next thing I know, it would be one of the worst down days, and it never made sense to me. So as a novice trader, I was like, what is going on here, and why is this a thing? And it's just the market messing with you. All right, that is what the market does. It throws people off. It'll do one thing and then it'll do the other. And it's only been now through the course of time and experience and kind of figuring out these patterns and seeing this time and time again that I could actually look at that and say, no, I think this is, I wouldn't be bullish on this. In fact, this is the tail end of the up move, and that is exactly why I was posting these things yesterday. So anybody who's new out there and you're kind of, this confuses you, just keep practicing, just keep studying, keep spending time in the market, and these things will start making a little bit more sense to you, and you'll be better prepared to expect them. But anyway, as far as the hourly chart, 50, 200, 50 maneuver, like that maneuver has been treating us really well for the last few months, really, really well. It's been keeping us both safe and profitable on a lot of things out there. Now, as far as it coming back down to the hourly 50, typically in a bullish scenario, that should be support. We're also at the lower third ATR, which is usually an oversold situation, or at least the outer boundary. Or if price is going to dip just below there, then that would be a trampoline move since the Moxie indicator is above zero. Now, while that's all well and good and true, I am not totally set on the 15-minute time frame yet. We don't have any confirmation. Price is still below a downtrending 15-minute 50, and the Moxie indicator is still below zero and spread. So while I would love to say, yes, let's buy here, I can't quite confirm it, all right? And I'll show you this on a couple other things that I'm looking at. So, Tesla. And now those of you in the Moxie group, like, you guys remember the X that I put, right? Now, this is why I like to just kind of put an X as far as an area. The lateral location, that can vary because it's like, okay, is it going to take 1 day or 5 days to get where I think it might get? And that's why I left the X, because even though this move right here kind of got close to it, I was like, I still think it could do better. I think we're going to get there. And lo and behold, yesterday into today, right there, and where are we at? We're right at the X. So it just took a matter of time until we finally got that. And that's what we're looking at. So oftentimes there could be a pattern within a pattern. And so you can see here on the daily chart, here's the leg, here's the heel, here's the arch of the foot, there's the ball of the foot, there's one elf toe. And then we might be getting another one. So again, if, and it's a big if these things are going to get bullish, then we're looking at a leg, heel, arch of the foot, ball of the foot, and then we might be getting another elf toe. So pattern within a pattern if we're going to be getting something like this. Robert, I see, please keep me posted when you do this type of program. Well, as far as being on Facebook and YouTube, I do this every Wednesday, same time. So just set your calendar, set a reminder, something like that. And if you want something more consistent, come join the Moxie room. Then you can see me talk about this stuff all the time. And then also, as far as simpler trading goes, we're in the free trading room, which, as its title implies, it's free, so you can tune in. We do that. I'm in there Monday, Wednesdays, and Fridays, same time. So there's lots of ways that you guys can tune in and check this stuff out. So as far as Tesla goes, as I said with the S&P, I don't want to just buy at the hourly 50 because there's no way of confirming that it's ready to turn around, which is why I'm using the lower time frame to help figure that out. And you can see that there was just no sign of price turning around yesterday into today. So that's where I left you guys off, as the Moxie group. What's going on? And I said, yeah, I said we probably still have more downsides. So let's kind of, just keep hanging out and waiting and see what's going on there. So we'll have to see if that happens. If, and again, big if we are going to get bullish, at least we are building in the ability to do that, because we are narrowing the distance between the daily 8 and 21. And this is technically a trampoline move. It's not confirmed, but it's a potential trampoline move. And if this wants to eventually go up, it is at least going sideways enough that it could do that. But it could also just go sideways until it goes lower. So really, I can't emphasize this enough. Keep your head on a swivel. You might be prepared for one thing, but the other thing could happen. Okay, so this is not a market where we can really say with too much with confidence which way things are going to go. And so as much as I might be looking for things to do some sort of rally, they may not. So, or The bullishness into the 4th of July might just be a 2-day pop, and then we start over next week, okay? So really just got to keep that stuff in mind. Let's see. ZL, I don't do options, so asking about a strangle, I just wouldn't be able to help you. So sorry about that. And then JTD, where do we go for the free trading room? Go to simplertrading.com and look at the free trading room. It's on the outside of the paywall, so you guys can get that. Pretty much all of our traders are in there. There should be a schedule, and so you can come and check that stuff out. So yeah, free trading room at simplertrading.com. All right, then, I keep talking about China. I keep talking about, say, KWeb or FXI. And over in the Moxie group, I've talked a lot about this, say, on the weekly time frame. You guys know my deal right here, kind of at the arch of the foot. But then if over on, say, the daily chart, if we kind of use, say, the first move versus the second move concept, or even the daily, or even the 50-250 concept, at some point, this gap between price and the daily 50 is going to be a problem, okay? At some point, I imagine price is going to need to come back down and either test the daily 50 or actually dip below the daily 50 for a trampoline move, okay? So the question is, when is that going to happen? Well, I've been watching this, and I've been watching individual tickers to help give me a little bit of a sign as far as that goes. And to the Moxie traders, you guys saw what I put out this morning. You'll notice that we had price jump up here over the last few days. And where did it jump into? Right into a double top. How about the Moxie indicator? We've been noticing that the Moxie indicator has been lagging, right? So as much as price has been trying to move up like this for the last couple days, what has the Moxie indicator been doing? Not much. How about on the 15-minute time frame? Price has been moving up like that. Notice that the Moxie indicator has been, let me do that better, has been going flat. And now we're starting to get another curve down. So this is something I've been watching. And you can see here right up into the third ATR, and also notice the gap between price and the hourly 50. And that was through KWeb. And then we can look at FXI. Kind of looking the same way, isn't it? And even more. I mean, look how exacerbated this is. Like right there, big old gap right into a double top. Same thing with the daily 50. Negative divergence, okay, and gap here between price. And then you can see here price moving up, Moxie indicator level, okay? And now we're starting to weaken. So I look at stuff like this and I'm like, yep, seems about right. I think China seems to be moving down. Now, I don't know necessarily if there's going to be timing, like can China move down and the US stock market move up? Do they have to be in sync? I don't know too much about what's going to happen there. I would treat them individually. I would just look at them for their own situation and not try and say, well, if one does this, the other does that. We're doing two different things with our countries. China's easing, we're tightening. They've been beaten down for a long time. We're just starting. So just take them as they are, right? For each of them. So as far as shorting it, I do think that this is about where price is going to be running out of some energy, and I would imagine that this could be the beginning of price making its way back down to the daily 50. That's kind of my bigger picture of what I think is happening with this, okay? So it may not be an easy path, but I think that is about what I would expect. So Chucklehead, hopefully that kind of answers your question there. yeah, Thunderfin, old spy pit trader. We've never seen a stop we didn't run. Yeah, exactly. Travis on Twitter, it's my Twitter handle. Let's see if we go over here. It's Profit Pilot. It's at TG_Profit Pilot. So that is where you can find me on Twitter. And you can see here I've been posting quite a few things. It looks like wow, that's funny. I can actually watch myself live as we're going through that. Well, that's kind of fun. So yeah, that's where you can find me over there. And we post a few things as I go. All right, so let's kind of get back into this. FXI, PDD. And you guys, oh, hey, look at that. Funny, isn't it? Look at this. Price been moving up. Moxie indicator's been moving down. There's our Moxie price trigger. And what do we have? A 50, 250 maneuver. So see why this has definitely been taking time. It's moved up further and longer than I've been expecting or wanting. But I saw that the writing was on the table and the writing was on the wall. And I just kind of say, yep, it's still there. It's still there. So give it enough time. And, you know, PDD as an individual stock, I think, is still going to head towards the daily 50 at some point. So I think here is a decent area in order for that to happen like that. So that's kind of what we're looking at over there. And then, yeah, so let's go kind of circle back. UVXY. There hasn't been too much action right now with this. I know a few traders in the Moxie room like to set some limit orders to kind of just buy back in this area based on what I've been saying with price moving down there. Hey, that's great. It's been working out for them. I'm waiting for a little bit more robust, more of a robust trigger. Okay, so this is the UVXY, and what it's doing and its potential setup is definitely making me on guard about the market going lower, because I think the UVXY is going to be what helps me as far as timing goes, as far as timing the market and when the market's really going to roll over. Because the fact that the UVXY and VIX has not broken out, I mean, if you look at this, it's still contained. All right, we haven't done this. When we do that, of course, the market's going to be rolling over. And you can see we keep coiling, getting tighter, tighter. Like something's coming. All right, something is happening, something's coming, and as I said, we're supposed to be bullish. You know, seasonality is that we go bullish into the 4th of July, but that bullishness could also be 1 or 2 days. It doesn't have to be a huge major trend. Okay. The other thing I'm looking at is, yes, we've had a pretty good move up here, but I want to see if we can get a little bit more divergence and get the Moxie indicator really nice and tight. We're not quite there yet on the 15-minute time frame, so it's still. I'm still not totally set on that, but one thing I do want you guys to see is we basically have, call it like a double bottom there, and we have positive divergence here. Now it's the UVXY, so it's tricky. I'm not going to be weighing in too much on that right now, but I am noticing that the Moxie indicator is having positive divergence, okay? And again, just from a price standpoint, we've been seeing a lot tighten up on the daily chart. Let's see, Boeing, you shorted Boeing at 140, nice. Yeah, 15-minute Moxie was looking good. What do you think? So, okay, so Ron, 2 things. One, I think, okay, first off, I think that was a good call right there. You've got that figured out, and this could definitely keep going lower. My problem is, when I look at this kind of stuff, we could just get in areas of chop. And so if you're going to be trading stuff like this to where it's already had a pretty big move down, clearly you can see here there was a big move down, and what it's trying to do is get back to, say, the daily 50. The challenge is that it chops sideways like that. That is where I have a hard time, because we can have a couple trades here or there, but overall the whole thing's just going sideways. It's a very difficult thing to catch a trending move when you're really kind of going sideways on a higher time frame chart. And so that's why it's like, this trade that you had here worked out nicely, but it could also flip around the other way, mostly because the market's going sideways. So just caution yourself with that. But you were totally right. Price up, Moxie indicator down, fell below here. The whole market was going down. I had at least been guiding you guys about that. You can see more or less a level like that, and you can see here the hourly Moxie indicator was not looking that great, and you can also see price running right into the underside of a downtrending daily 50. So yes, the bearishness on this looked correct. However, if the market is going to be bullish at some point, I would not be surprised to see Boeing just poke its head over, get over the daily 50 for a little bit. Now, it may not last, but I could see that happening because it looks like it is at least trying to flag sideways. Now, maybe what it's trying to do is flag sideways into resistance and then continue lower. That's a possibility too. But it's really, really hard to figure out how big of a move or how long this is going to last when essentially you're going sideways on nearly every time frame. Okay, so that's why some of these are harder to work with than others, because they're just going sideways. Yeah, Ron, I just see your next comment. Market is doing nothing here. Boring. Yeah, that's basically exactly what I was just saying. So that was good to follow up on that. Yeah, you sold calls, so you're fine with that. Perfect. So that is one benefit that you guys as options traders, I don't trade options, that you can do. You're like, hey, I'm just gonna sell stuff up here because I don't care what it does, as long as it doesn't go there, I'm cool. And so that is a pretty good perk of being able to sell calls or sell premium. So definitely, in a market like this where things only trend for a little while, yeah. Otherwise, I have to sit on some of these things until they finally work out. Adam, do I think this is a good time to start buying long term? No, definitely not. Definitely not. In fact, I had a friend of mine, a friend's dad actually, call me about Bitcoin, and he said, Bitcoin's down there. It's like what, 20,000 or something, and it's way down there. And you can see here it's back to all this kind of stuff. I said, I know, I get it, but there's no guarantee that it's gonna. There's no guarantee that it's going to go up from here. Oversold can continue to become oversold. If you want to see an example, look at PayPal. Okay, I'm sure a lot of people thought that PayPal was going to go up right there because running into all of its previous support. And what did it do? It kept going lower. How about ARK? There was a bit of a bounce. There was a bit of a bounce right there. And look at this. We are still, right there. We're lower than where we were before, okay? Things can keep going lower. So just because it's low or just because it's on sale or just because it's oversold doesn't mean it can't keep going, okay? When something like this becomes toxic, people don't want to buy it. They just don't want to buy, okay? They're not going to step in, okay? And we are not big enough in order to move a market, okay? So you got to really keep that in mind, and keep in mind how much damage has occurred out there. Now, maybe you've been fine because you were able to sell at the top and you can go short and been making money. That's fine. But you have to think about all the other people out there. There have been institutions that have been blowing up. They have been margin called. We've seen this in the last few months. There have been hedge funds that are blowing up. There are traders. They'll hold on for dear lifers. I mean, the people who thought they were into crypto. I mean, how many firms are we hearing about crypto? And they're just blowing up, okay? So we have to also think about what are the mechanisms that are going on out there. There is just simply less money. There's less money out there to put to work, okay? Wealth has just gone poof. It's just vaporized, all right? There is simply not as much money to put into the market right now that even if people wanted to come in here and buy this stuff up, it's just not going to start a new trend. So don't try and be a pioneer or anything like that and say, well, Bitcoin looks like it's at a good price and it's all the way down here and this is a good value. I don't believe that, okay? We're not here to be Warren Buffett's that they want to start buying here and they don't care if it takes 5 years for it to turn around, okay? But that's not us. We want only to catch trends. And right now there's just nothing to do. Nothing to do. So just don't succumb to that. And don't do anything with that. Same thing with Peloton. Like what are you doing here? Nothing, unless you're trying to short it or whatever. Yeah, you could trade long, but you better find the right spot. If you can figure out how to catch that or catch that or catch that, be my guest. But otherwise, I have zero interest in being in something like this. Even to the short side, I don't really want to be in this because it's too tough. It's too sporadic. I mean, it's like looking at Roku or something. Look how gnarly Roku is. Peloton could have been like Roku. I do not want to be trading something like that. So knowing what not to trade can also be very important out there. All right. Patel, I have not gone over alt. I think we're starting to top out through here. I'm going to give it a little bit more time, and then we might actually add a little bit more short. So I think something is close to that. And then last one, because I got to get going. I'm still not totally set about Apple. I would like to think so. It is coming down to the hourly 50 like I wanted, but this is not a viable situation on the 15-minute time frame. It's just not. We are not here. So even though I'd love to be bullish on this, I just don't, it's not confirmed on the 15-minute time frame yet. So I gotta wait. I gotta hold off. Anyway, thanks guys for tuning in. Remember, come over here to profitpilot.com if you're interested in checking out more about me. We also have free trading rooms at simplertrading.com. So go over there. It's called the free trading room. So come tune in. I'm there Monday, Wednesday, and Friday. And then the rest of us are cycling through there. So go take a look at the calendars and stuff. But thanks again, everybody, for tuning in. And we'll see you next week. Later.